So what are you thinking now after what happened last week and then certainly after today?
Well, I think when yields go over 3%, you're gonna have an effect on the stock market and tech stocks. You know, most of this year, I was looking at the 10-year and the Nasdaq or the S&P. You know, we started the year 1.5 at an all-time high. Then we went to 3.5. Stocks bottomed 2.5, big rally, and now a little bit of tightening and a little softening. So, you know, interest rates are really important for the stock prices. And I think a lot of people are nervous that Chairman Powell is going to be hawkish in his Friday talk. And I think they're positioning for that. And if he turns out not to be, I think we could see a really big relief rally on Friday afternoon.
Interesting. Why wouldn't he be, though? Well, I mean, it's right to expect him to be hawkish, is it not?
Well, you know, if you take the market says we're going to have another 125 basis points of tightening by year end. I think we should only have 100. How we do it, you know, take your choice, 50, 25, 25, or whatever, because I see a lot of tightening in the actual data. What I mean is, first of all, and it was mentioned, the money supply has come to a screeching halt from the biggest increase in history to the biggest slowdown in history. Take a look at the dollar, one of the biggest increases in history, one of the biggest increases in the 10-year, one of the biggest increases in the Fed funds rate. If you take a look at the amount of tightening that is there, it is strong. Take a look at the market prices. Take a look at commodities. Take a look at housing. Now, I know Adam mentioned that we're going to have we're going to have that rent index continue to come up. That's very backward looking. Talk to realtors. Housing prices are sinking right now. Rentals, they're not getting the jumps that they got. It's still up a lot, but they're not getting the jumps that they had just 1 or 2 months ago. So if Powell and the Fed take a look at what's really out there, I think they won't take an overly aggressive, which I think would be a mistake. And by the way, something else which I've mentioned, and I really wish Powell and the Fed would talk about it, is how do you add 3.2 million workers as we have in 2022 and have zero increase in GDP? The biggest collapse in productivity in history, and nary a word from our central bank or our government about, gee, what's causing that? And if we have a snapback in that biggest collapse in history, that's going to also lower prices going forward. So I don't think we have to do that much more tightening.